Joining us, co-founder, director, Alavan Business Advisory. Alastair, thanks so much for taking out time for us. Markets worldwide are in the grip of fear and panic, and it is, fair that it seems like it's a bear market. Would you assess this situation similar to 2008?
Well, there are certainly some comparisons, and let's start off with the sell-off we've seen in the last couple of days or so with gold and silver. Clearly, this is very common with what we saw in 2008 with hedge funds and other asset managers looking to grasp liquidity because of, obviously, a need for liquidity to make relevant payments and so on. And perhaps relative to where we were a week, even maybe 10 days ago, the sell-off in gold in the last couple of days is perhaps a surprise. But in the circumstances, I do think it is totally understandable. Now, there is, I think, one very big difference with 2008, and that is, as we all recall only too well, the run in 2008 really started in the US. The reverse is very much true where we are today, in my view. When I was a young man, there used to be a saying that when Wall Street sneezes, the world catches cold. Obviously, coronavirus is much more serious than a mere sneeze, that's a mere cold, let alone a sneeze. But the reality is that the world has caught coronavirus, and the US now seems to be catching up. And I fear that in the US, at least, the worst may still be to come, because it is clear even today that the US administration remains some way behind the curve in terms of its precautions to try and contain the virus in its own domestic backyard, i.e. the United States of America.
While it has not reached a case of complete capitulation, is it hard to predict that the bottom may be in and around, or it's a long time before one would see a bottom?
Well, I do agree. Clearly, we need to see what more central banks and indeed central governments, by way of fiscal stimulus, are going to do to try to turn the situation around. But the mood that markets are in at the moment, it rather looks like almost any stimulus is either going to be dismissed as not enough or cause more concern by getting investors saying, oh my goodness, such and such has happened, things must be even more serious than we'd anticipated. Now, I'm going to stick my neck out here, and I'm going to say that I think certainly the S&P has got a way to go before it bottoms out. And talking to investors on a regular basis as I do, other than those who are looking to trade the short-term recoveries, which are soon selling off again, I don't know anybody who's actually looking to get back in a big way and for the longer term at the moment, which rather indicates that the general consensus among investors is that, as you suggested in your question, we do have a long way to go. 2,000 for the S&P, not impossible in my view.
Alastair, this is Mubina as well joining in. Do you think it was imperative for the RBI to display some sort of urgency or aggressiveness like the US Fed, which was lacking, on the part of the RBI, or do you think we are beyond help at this point from the central bank?
Well, I certainly think the central banks have got to act, otherwise they're going to get a lot of criticism, and not just in the case of the Fed from Donald Trump. They're going to get criticism from all quarters. The difficulty, of course, in the 2020s, as against 1997, 98, or even 2008, is that the world is about much more than just G7 these days. And coordinated action among the wider community, let's say the G20 for the sake of this discussion, particularly at a time when China appears to be beyond the worst as far as the epidemic is concerned, is not at all easy. And whereas one might hope that a big coordinated action by the G20 banks could help to arrest the current slide, right now, I'm not convinced that central banks have got enough ammunition, partly because of the last 12 years of historically low interest rates, partly because there's not enough of them acting in unison. I'm not sure the central banks have got enough to do more than soften the blow. I don't think they can reverse it.
Alastair, Donald Trump has, of course, acknowledged that the virus appeal could stretch till August and that the U.S. economy may be heading to a recession. Do you think a global recession is inevitable?
I certainly, I certainly wouldn't like to go as far as to say that it is inevitable. After all, as I mentioned a moment ago, we are perhaps past the worst in China as far as coronavirus is concerned. I think we can reasonably assume that the Chinese authorities will do everything they possibly can to try to get the economy back on reasonable track, by which I don't necessarily mean 6.5% GDP growth this year, but looking to get back into that sort of area. And clearly that would be helpful not only to China per se, but also to Northeast and Southeast Asia in particular, and also given the size of China's economy today, actually to the global economy in theory, but only once we get all these blockages out of the way, which we're seeing today, travel restrictions in Europe, travel restrictions in the US, flights being cut left, right, and center, not so far embargoes on trading goods. And I'm not suggesting by saying so far that we're going to get to that, but clearly these are blockages to global growth. So yes, one certainly wouldn't rule out a global recession, but right now I think it would be a bit doom and gloom to go as far as to say we are certainly on track to a US recession, or indeed for that matter, to go back to your question, to a US recession. Let's face it, Donald Trump is going to try to do everything he can to avoid that, because he, perhaps above all people, is going to be very mindful that the reason that George H.W. Bush, the last US president, only to serve one term, one of the main reasons why he failed to get re-elected was because the US had been in recession the previous year. A recession during an election year would, I think, be very bad news for Donald Trump's re-election prospects.
You know, Alastair, FIIs have obviously been in sell-off mode in the markets. In fact, the latest reading meant that almost 40,000 crore rupees worth of exits from FIIs has come in. How long before you think DIIs as well may get edgies?
Yeah, I do. I think the way that the trend is going at the moment, we're likely to see increasing edginess among domestic investors. As I suggested earlier, I don't think we are at the end of the sell-off yet. By any means. I do think, just to go back to where I started, that once we see the quest for liquidity sorted out, as we saw in 2008, we are likely to see precious metals bouncing back. I wouldn't like to put a time frame on that, but clearly when that bounce back occurs, they are going to be potentially attractive to all investors, including domestic investors. Safe havens will come back into play.
You know, we are calling this one not just a biological related crash, but also a man-made one because of the oil price war. It's something that's caused the WTI, the Brent, to come below the $25 per barrel mark. How do you read into that? What's going to be the impact on the equity markets, especially India?
Well, clearly one of the benefits from what's going on in the global markets at the moment, as far as India is concerned, is lower oil prices. India, as you know, hence your question, is very sensitive to the price of oil. I do think that where we are today is not necessarily the bottom as far as the price of Brent crude is concerned. I can't see it going a whole lot further, and I would expect in due course to see some recovery. Clearly, with West Texas Intermediate now below $30 a barrel, we are going to see tight oil facilities in the US closing down, albeit perhaps only for temporarily, short period, long period. Furthermore, we're going to see some US shale producers closing down because of financial difficulties. And the lower the price goes, and once we do see shale coming off the market, I think the possibility of some sort of deal within OPEC plus, which basically means between Saudi Arabia and Russia, is more likely, not inevitable, but more likely. In that event, Saudi Arabia will clearly take a significant proportion of the extra oil it is pumping, and probably a bit more too, off the marketplace, and we may see a recovery. But I do think the ceiling on a recovery in the price of oil is likely to be pretty low. I don't think we are looking at where we started at the beginning of this year, which was roughly $70 a barrel for Brent, simply because we still were in a world even before coronavirus came along where supply exceeded demand. And it's going to take an awful lot being removed from the market for us to get back into a situation where there is equilibrium between supply and demand. For the time being, therefore, good news for India, but I do expect that prices will start to rise in the foreseeable future, by which I don't mean next week or the week after, but maybe as we get into mid-year.
What is your assessment on how India has handled the virus so far versus the other countries?
I think first of all, let me say that I think this is a really difficult challenge for any and all governments, whether they are democratic, autocratic, small countries, big countries. Doing the right thing is very, very difficult indeed. If you're going to try to keep your population as safe as you reasonably can, really you've got to take the sort of draconian measures which we've seen initially in China, in the case of Wuhan, and now in Europe with borders being closed, bans on foreign visitors. Maybe we're going to see the EU agree to a 30-day ban on all visitors from outside the European Union. Of course, it takes all the members of the EU to do that. Reaching a consensus in the EU is never easy. But in the meantime, I think everybody's going to be following what's going on in Italy very closely indeed, where the death rate has been far higher than one might have expected. And my sympathies to all my Italian friends who are very much in my mind at this time. I'm not sure if India could actually be as draconian as Italy has been. Of course, the situation is nothing like as serious in India at the moment. But I do hope that the Indian government is looking very closely at lessons from Western Europe, at lessons from perhaps examples of getting ahead of the curve, which are not as good as Western Europe. And I would again put the US in that category, because there will be lessons to be learned from other countries. And I'm sure your government and indeed the state authorities are looking very closely at what can be learned from the wider world.
Alastair, what do you make of the sentiment that's prevailing across the global world markets?
Well, it's clearly not good at all. I think partly because of the high degree of uncertainty. And we have uncertainty on two counts, as I've said on your channel before. We have uncertainty in the sense of we don't know a whole lot about coronavirus itself, although we are obviously finding out more about it the hard way at the moment. But equally, there is still a lot of policy uncertainty out there. And all I can say to your audience, as I said previously, is follow the policymakers closely, try to get close to where the policymakers are, because to a certain extent, your positioning, the positioning of your portfolio is going to be driven by policy decisions rather than by the coronavirus per se and our scientific understanding of it. If we have a better grasp of where policymakers are going, I do think sentiment will improve, although likely still to remain soft for the foreseeable future, simply because we are really in very uncharted territory today.
All right, Alastair, thanks so much then for joining us on the show. It's lovely to get in some perspective from you on this carnage that we are witnessing in the equity markets. Well,